Okay, welcome to another short training. This is about risk management and how best to, go about your trading or investment journey. Just to describe this and make the major difference, trading can be considered investing. However, if you look at the two, as a trader, you can make money when the markets are going up, meaning in a bullish trade, and you can also make money when the markets are going down, meaning you're selling, you're going short. Okay. However, as an investor, although often investment is considered in terms of how long are you gonna stay in that trade, as an investor you can only buy, and the approach is you buy low, you sell high, because the difference is going to be a profit. However, both these approaches, they vary just in sophistication and the period of time during which one is involved in a particular trade. So as a trader, often you're looking at anything from 1 minute, few seconds, few days, few weeks, few months, but investment is often seen in terms of years. So all of them, you have to determine your entry point, because your entry determines your risk to reward. And in this short presentation, I'm going to show you different scenarios upon which you can decide your risk to reward, and then you are going to choose which one works, which one is the best, because it's not about having the best trading strategy or investing strategy. It's about managing your risk versus reward, because even the most suboptimal trading strategy, if you have a good risk to reward ratio, you can be profitable in long term. Remember, everything you do, look at cumulative. In this case, I'm showing a chart, a daily chart, whereby you will either choose option A, B, or C, or D. Option A, you risk 50% and you stand a chance of gaining 50%. That's a 1-to-1 risk to reward ratio. Option B is you risk 25% and you are likely to gain 50%. That's a 1-to-2 risk to reward ratio. Option C is you risk 25% and your reward can be 75%, meaning is a 1-to-3 risk to reward ratio. Option D, which is also a very crucial part of trading, whereby you can decide, I'm not going to be involved, but as I always say, nothing risked, nothing gained. So you have to risk something for you to gain something. So I'm going to show you different scenarios of these examples, and then you can make a choice of on what options to go for. In this example here, you are risking 50% and you stand a chance of gaining 50%, meaning it's to 1-to-1. That's option A. Would you go for that one? As you can tell, if the trade goes in your way, you're going to be 1020 in profit, but if you lose, you're going to go down to 980. Is that something worthy risking, or would you rather consider option B, in which this is a case of 1-to-2, whereby you're risking 25%, but your reward is about 50%. That's a 1-to-2. In this case, if you lose, obviously you'll lose 20 and you're left with 980, but if you gain, you go to 1040. So that's a 1-to-2 risk to reward. That's option B. Is that something you'd consider? Please, whatever option you choose, give a reason why. And always remember, as a tip, your success as a trader is based on the accumulation of a number of trades. Okay, so if you have a series of 10 trades and you lose 50% of them and you win 50%, which risk to reward ratio would lead you to be still profitable? Okay, then the other option to consider is actually option C. In this case, you are risking 25% as your stop loss, meaning your risk to reward is 25%. That means if you lose, you only lose 20 out of the 1,000, and if you gain, you can go up to 1,060. That means it's a 25% risk, 75% potential gain, meaning it's a 1 to 3. So we move from 1 to 1, 1 to 2, now at 1 to 3. And always remember, you're looking into a number of trades. If you take 10 trades and you lose half of them, which way will you still remain profitable? Would you rather have a very highly effective trading strategy that gives you, maybe for every trade you take, for every 10 trades you take, you win 7 and you lose like maybe 3? Or would you rather have a not so good trading strategy but a good risk to reward? Obviously the third option is 1 to 3 good enough for me? If it's not, and all the options above are either 1 to 1, 1 to 2, or 1 to 3, you can decide. I'll go for option D, whereby I'll not risk anything but I stand chance of gaining nothing. There is no difference between you and somebody who is not trading, but if you're choosing not to trade because the risk to reward is not good enough, because you could say 1 to 5 is what you'd settle for, but here we only have option A, B, C, D. Which one would you go for? So that you can be happy with your decision based on the gains that you'll take. Remember, at the end of the day, you are going to consider a series of 10 trades whereby you won half of them and you lost half of them. Which risk to reward ratio would add you up in a profitable way? Okay, so these are the options. Either option A, you're risking 50% as a reward of 50%, that's 1 to 1, or 1 to 2, you risk 25, you can gain 50%, or 1 to 3, all option C, that's a 1 to 3, or option D, you don't take any trade, and that means your account is still okay, but you're not likely to gain anything. We choose wisely, and then we can have a discussion on what would be the best approach. It doesn't matter what your trading strategy, whether you use the indicators, trade lines, smart money concept, traditional, supply and demand, resistance and support, whichever method you use. I always say none is superior over the other one, as long as you have a method and you stick to that method. Whether even you trade the news or sentiments or commitment of trade, it doesn't matter. Let's see.